Good afternoon, everyone. Hey, it is Shooter Scott Henderson. Happy Easter. Of course, at the end of our presentations, please do review our disclosures. Hey, we're looking at swing trade notes for April 19th through the 26th. I think this week is going to depend on who's left standing. I'm actually hearing some horrible news about the banks and the fact they've underwritten CDOs. It raises the potential catalyst of a financial crisis to an extreme level, because of, if the stories are true, we will be looking at a Lehman type event and or Great Recession or a combination thereof, because I can't imagine the degree of unrealized losses in treasuries and CDOs that occur on the same balance sheet. I just have not been able to get a concept of around how big that is. So let me shift gears here real quick. We are looking at KRE. Now, the rumor has it, specifically, I was watching, and forgive me, I'm not recalling the gentleman's name. He was pointing out where, in the most recent financial statements from Bank of America, where they were masking their risk on CDOs, just like the unrealized losses in treasuries are not accurately being reported. Either the FDIC or SEC is allowing them to mask it. I'm not sure which, but so either KRE or BAC to me sounds like the play, because it sounds to me like Bank of America is in trouble. Now, this is not an auto scan. This is my work in the way I view Elliott Wave. Okay, we have an ending diagonal, which is typically followed by a corrective leg. This could just be an ABC. This could be A, B, and then we could get a C down here in the end. But in either case, we have some confluence for a retrace, maybe back down to $10 if we have a catalyst in banking. So you are your own captain. This is your call. Cash is a position until this settles, because honestly, I can't tell you how deep this is going to be. I don't like the combination of events that I'm hearing, and it has a potential catalyst to be really bad. So that said, I'm going to put on some January 2026 $10 put. It's solely an insurance play. That way, whatever I have on the table is insured to some degree. It's not going to be that large. It's going to be about a half a point, 0.5%. And then hopefully I get the opportunity to chase it. However, the Lehman type event, just explaining how this will work, it will be behind closed doors. We will not hear about it. We will wake up and we will hear that bank A, B, or C, or whoever it is, blew up and is now gone and is being absorbed by C institution. And once the market realizes that those securities are worthless, the confidence in the banking system is the concern that I have. So that is the bet that I'm doing there. Now, what we're looking at here is a monthly chart of the VIX. I don't know that Elliott Wave's accurate here, just being blunt. However, if this structure is accurate and it's a super cycle like it is, we're looking for a wave 3 up around $75 from where we are. So here again, a percentage, nothing big. I am putting on some risk. I'm going to put them in the $55 and $75 January 26 calls, and I will post that in chat when I do that. I do have some open positions in VIX futures at the moment. I put them on as soon as I read the news last night. So that's my take. Let me jump back to swing trade notes. Let's finish that. And my general feeling here, I like to play in a different set of rules. Typically most of my work is reserved for rare members, but in these type of market uncertainties, I feel an obligation to share what I know. I think it's very important. I want as many people to be on the right side of this versus the wrong. So that's my 2 cents. Take it or leave it. Obviously, you're your own captain, so you make your own decisions on it. So we have 3 victims this week. I'm going to be fairly shallow on this presentation because of the backdrop of the banking crisis. Going into this week, I'm really watching 5 names. I'm watching Tesla, Microsoft, Meta, Intel, and Google. I have a very hard time putting any decent size on. The one that I like the best happens to be Meta. Excuse me, I keep saying that wrong, but it is not included in this article. So I'm not sure if I'm going to put on a trade very similar to Netflix, like we did at the end of the week, which ended up working. And then the only other 2 trades we really took last week were QQQ shorts, and then I was scalping the daily life out of the NASDAQ. But looking at my first victim here, GitLab's. Now, This was one of only 5 names that came up on my scans. And I'm being very particular, multiple time frames in the scans I'm looking at now, because unless it has decent upside, I really don't want to put the risk on the table. I'm just being candid. I'd rather sit cash. All right. So now GitLab's, this is really just a trade. I'm looking at this as a 2 drive. So drive 1, drive 2, maybe back to $50. So I'll enter above 43. So in other words, once this little breakdown pattern gets bullish, right? So at 43.40, I enter, add above 43.80, add above 44. I really don't want a full position size until we're above 46. So I'm probably going to be a half position on this, and that's my bet, and that's where we're going. So I'm going to target 45 and 40, $50 calls. Just do a mixed bag there, 60-40, 60% in the 45s and 40% in the 50 as far as the call. And I'm probably going to do the end of next week's instead of May. All right, looking at the next victim. Now, this actually is a catalyst swan event drive here, because if what's happening in the banks manifest, there will be 2 other drivers behind that. In other words, we'll have like a snowball set of events. BOJ is probably going to hike because of the panic in the dollar. It's going to drive them, force them to move. They're probably only going to move 25 basis points. If they move 50 or above, it's going to be a huge catalyst. I expect the dollar to plummet, right, which will force the treasuries up. Now, on top of that, we also have a huge number of call positions opening between 87 and 95 in the May TLT calls. So above 87.68, we're entering in on the 90 calls. I will be doing May's. I mix, though. I might rotate and just do January 26 100 calls, because it's kind of a risk-reward thing for me. It's like, okay, we've had a very good start to the year. I'm willing to risk this dollar figure right now on this trade, and I want the reward if it's going to pay. If not, in my book, it's a loss. That's really where my mindset is right now. I don't like these market conditions. I really don't want to be long anything. However, TLT happens to be another form of insurance of a catalyst or a swan event. So I like it, right? So add above 88.50, add above 89.28. Roughly want to be on a full position size, above roughly $90 to the upside. All right, now looking at my last victim. Now, rumor has it, and unfortunately, I just don't have time anymore to verify all of the events. I look at it when I put the trade on. So apparently TSM, Taiwan Semiconductor, is going to be exempt from tariffs, or is exempt from tariffs. So the heat that semiconductors has taken, this obviously, because of that catalyst, now is a prime candidate back to the upside. And actually, we could see 175 on this thing really quick look. So the thought is enter above 154, right? Add above 158, add above 160, have a full position size on at 160. So TLT and TSM are the only full position size. And if this starts moving, I will get a little larger than full position size. Instead of going to the 160 calls at 160, I might go to 165 calls. So now I have multiple levels. And in that scenario, I may only want to risk 20% of the capital that I put in at that price level, because now these first 2 blocks are working. We're well in the money. The idea is to put a set block of how much capital you want to put at risk. And then you determine what works for you. Set your trailing stop. You hit PT target 1, take 50%, run a BE stop on the balance. Keep it really simple, all right? That's what I would suggest. But that's my 2 cents, folks. That's what we've got for this week. Great trading. Until next time.